Ladies and gentlemen, United Wholesale Mortgage, ticker UWMC, has taken a huge beat down in share price today off the back of its quarterly results. Now, on the surface, you see a lot of red, okay? But honestly, it's not as worrisome to me as a shareholder as it might look, and I think that the market's response is probably a little bit over exaggerated. I don't think the sky is falling, and I'll get into why momentarily. So, about the $139 million loss, the CEO said that it reflected a decline in the value of mortgage servicing rights and that the company's core business was profitable from an operations perspective. Okay. So basically, what that tells me is that on an operational level, they're bringing in more money than is going out. And when they talk about a loss due to a decline of value, that to me sounds more like, hey, there's a way to evaluate the book value or whatnot of these mortgage servicing rights, and because of different fluctuations, they are down in a big way value wise. And hey, that can happen with any type of asset. Like banks are dealing with that same thing with interest rate exposure, right? So does that worry me all that much? No, because interest rates will go up and they'll go down. Okay, like there's going to be ups and there's going to be downs, and no individual company out there controls what happens with the interest rates. They just have to adjust, And when it comes to mortgages, the decline in revenue is pretty easily explained. Okay, so there's two operational metrics when it comes to mortgages, and then the overall volume that they produce. Okay, they either do refinances on existing mortgages, so that's you've already got a mortgage on your house, and you go in and you refinance either to pull cash out or to get a lower interest rate or what have you, or you've got purchases. Now, interestingly, they had really consistent growth in the volume of the mortgages that they were doing in both sides of the business, right? Both on refinances and purchases, up until the point where you started to get this increase in interest rates. Now, most of the shrinkage, though, you'll notice, especially like as of the most recent end of 2022 quarter from last year, they had the biggest decrease in terms of refinances. Now, this makes a lot of sense, all right? So let's say you got your mortgage back, in this, general area back here, 2021, 2020, 19, whatever, when interest rates were at these ridiculous lows. You've got like a 3%, interest rate on your mortgage. And why on earth would you refinance your mortgage out here in 2022 when you're going to have like a 5-6% interest rate or whatever it was? Of course, you're gonna be reluctant to do that unless you really need to pull cash out of the property for some reason. So a lot of these refinances, maybe they're like different investors or whatever that need to pull cash out to do different things in their business or something like that. But I think as far as like regular, just like everyday people who usually refinance to like get a lower monthly payment, you probably aren't getting much of that because the higher interest rates would kind of work against that idea of having a lower monthly payment. But when you look at the purchases, the dark blue here, they've actually done a really, really good job, I think, of, keeping that up, right? Now, they've done that by capturing market share, okay? They have really, really, really eaten everybody's lunch. Let's see. So, used to be that they were trying to overtake Rocket. Well, now, no matter how you slice and dice the market share for mortgages, UWM is number one, Rocket is number two. And it seems like every quarter that goes by, this gets more and more solidified. So I really love to see it since I was interested in UWM and had shares in it before they overtook Rocket. And so to buy into an idea that, hey, this is their big thing, is like they're wanting to surpass Rocket, become number one, and then to have shares of the company and see them actually execute on that makes me feel like I've bought into a competently run business that executes on its long-term strategic goals. And that just brings me to my conclusion here. It's really more for me about what they're doing now and how it will affect the company 3, 5, 10 years down the line. Okay, interest rates won't be where they're at forever. This industry obviously is very affected by interest rates in terms of the volume of business that they do. And it seems to me like they're focused on positioning themselves for the next up cycle when volumes get back to where they were, maybe in 2020, 2021. Because back then they weren't number one, and they still had much higher volume than they have today, and now they are number one. So I think in the long run, I'll probably be pretty happy with my small, modest investment in this company, where it goes. They're still paying out their dividend, so they still feel, I guess, that they can financially afford it, and that these little temporary glitches aren't affecting the business that badly. So management seems confident and competent, and I'm honestly pretty satisfied to keep holding them in spite of what the market is doing to the share price today. This is just noise, in my opinion, and we will see things play out over the long run and see who's right. So that's about all I got for you on UWM. Take it easy, everyone. Have a wonderful day.